Good afternoon, good evening, wherever you are watching from. This is King's Forex Academy. Welcome to a simple chart analysis on boom and crash. This is the best technical analysis you will ever get on boom and crash, and the best way to trade boom and crash. As we go through this very educative video, so I'll be taking you on some few things on boom and crash, basically how we came up with these trades and why they became a very massive trade. All right, so basically we will be looking at technical analysis, top down analysis on boom and crash, the best way to trade boom and crash. You can do well. We are on Telegram. You can do well to follow us on Telegram. This is our channel. We have our VIP, we have our regular channel. The VIP is actually free, as you can see. How to join our free VIP: it is absolutely free. Follow the instructions, create a derivative account using our link, or retag your derivative account to our affiliate link, and you have access to the VIP channel. So as you can see in the VIP channel, we have been giving a whole lot of wonderful trades, we have been giving absolutely wonderful trades all through. So yes, this is what we do. So back to the video. Kindly like, kindly share, kindly follow. Okay, drop a comment on what you want us to talk about in the next video. So we're starting from boom 600. Definitely, what was our bias on this market? The first thing you want to do trading boom and crashes, boom and crash, you have to understand that boom and crash operates technically, unlike currency pairs where there are fundamentals that affects the market. That is why I tell most people the problem is not that you are not good at trading or you do not know how to trade. The problem can be that you are actually trading a market that is not suitable for you. So migrating to boom and crash, a technical market that respects technical analysis a whole lot, is very much efficient and better for you. What you can do is come online, create a boom and derivative account, and get boom and crash. You will not have any news affecting your trades, any fundamentals affecting your trade, and all of those. So those are benefits you get from having to trade with deriv. Okay, and deriv is the only broker that offers boom and crash. So what did we do? We first off had to start our analysis from the daily time frame. All right, we started our analysis from the daily time frame. And on the daily time frame, the first thing you will need to do is mark out your key levels. Mark out your key levels on the daily time frame. Our first key level we marked out happen to be right here. This is the major support zone. This is a major support zone that we marked out on the chart right here. After marking out this support zone, the next thing we had to understand was the technicality of the support zone. Now you can see right here that at this support zone we had price touching the market the first time. It touched the support zone the second time. It came here, but it never touched the support zone. And we saw price coming back here the third time to touch the support. That was our initial and first, spark to know that this must be the time to buy, because technically whenever price hits its support the first, second, the third time happens to be most likely the most powerful time. And once you get a confirmation on a lower time frame that it has reversed from that zone, know that price will have a very long buy of that support zone. So that was the essence of our buys on boom 600. So what did we do? We noticed this, and then we dropped down to the 1 hour time frame. Dropping down to the 1 hour time frame, this is what we are now calling top down analysis. Dropping down to the 1 hour time frame is what gives you clarity. It's what gives you a brighter vision on what the chart is actually saying. So now right here on the 1 hour time frame, you can see 1 hour will give you a whole lot of clearer details. So you could see here price created a head and shoulder pattern right here, right? Price created a head and a shoulder pattern right here. So technically, we should have entered the market somewhere around when price comes back to what retest the neckline. Where is the neckline? The neckline is somewhere around here. The neckline is somewhere around here on the um for the head and shoulder pattern. So this is where price came back to retest the neckline on the head and shoulder pattern. All right, price came back, retested this neckline. Now when price is retesting a neckline, you don't just jump in because price is retesting a neckline. No, you jump in because when price has retested this neckline around this zone, which happens to be another technical zone. All right, the zone happens to be another technical zone because we have seen what a whole lot of respect on the pullback here, a pullback here, and a support that resisted this move here, and now price came back to retest it. So we had to be very careful. Now we needed to see a confirmation. The first confirmation was touching on the next neckline. The second confirmation happened to be what? The second confirmation happened to be price giving us a candlestick reversal pattern. Where is the candlestick reversal pattern? Right here. Candlestick reversal pattern. If you don't know about candlestick reversal pattern, you have to go and check up previous videos to understand that. Candlestick reversal pattern right here. You can see the candlestick reversal pattern. That was what gave us the third and final confirmation that yes, price is about to um, move in. And you can see after price created this neckline, price left a fair value gap. The first fair value gap price left happened to be one of our key um, lookout item. That was happened to be one of our key lookout item. This fair value gap is what would have determined if we will enter this trade or we let the trade go. If price had broken below the fair value gap with a huge body candlestick, we'll let the trade go. But price retested above the fair value gap, and immediately price closed this candle above the fair value gap after this rejection right here was when we were certain that the buy is fruitful, and that was why we enter the buy. It works every single time. It works every single time. Pick your key zones and then fire on. And here we move all the way up on this market. Now, if you had missed this entry and you had missed this entry, how do you get into the market for another buy? Simple and easy. Simple and what? And easy. The best way to keep moving into the market, you have to now wait to understand the new structure of the market. You now have to wait to understand the new structure or order flow of the market. What happens to maybe the new structure? An uptrend. You can see price goes up, come back down, price goes up, come back down. Now whenever you want to try to find the major point of entry, there are two things you could do. Either look for the fair value gap that is left after the major disturbance or pullback area, or you look for the previous resistance that has occurred before. What do we mean? For instance, you had missed this entry and you are looking for the next entry level. The next entry level will be the next fair value gap that price left around here, and you can see right above here is a fair value gap that price left here. If we were to take note of this, we could have seen that price left a fair value gap somewhere around sorry, my mouse is giving me some problem. I don't know why it's doing this. Somewhere around here. Okay, price left a fair value gap somewhere around here, and that could have been our reason for our next entry preparation. But you could see price came back and never touched into that fair value gap. So what does that mean? That means that fair value gap happened to be irrelevant at the end of the day. So we move up and again. Now price came back down. Did it leave any fair value gap here? No. The price leave any fair value gap after the pullback? No, we are not seeing any fair value gap. So after this pullback, what is the next fair value gap price has created? The next fair value gap price created is right here. You can see right here is the fair value gap price created. So as you can see right here is the next fair value gap that price created. Sorry for this. uh right here is the next fair value gap price created, and this could have now been our next entry. So what do? The fair value gap is not on its own enough for you to make a trade conclusion. So what you do next is you wait for a candlestick reversal pattern. Remember, everything is happening here on a 1 hour time frame, meaning that this trade is going to be held for a long time. It's an intra-day trade, or it's an intra-day trade. You are going to hold it for either a day or two or more. Now we can see right here that the next thing we could see was a candlestick reversal pattern. But if we have gone down to lower time frame, we would have seen other entry opportunities right there on that very area. All right, we would have seen entry opportunities right there on that very area earlier. Okay, so you can see right here was the entry opportunity, and we could have taken our buy. Now once we take our buy, where will our stop loss be? Stop loss be right below the fair value gap, and then our take profit will be um either at the previous high. Our take profit most likely should be at the previous high. Okay, but precisely for myself, I always love to do a 1 to 3 risks to reward. Okay, I always love to do a 1 to 3 minimum risks to reward. So here you will definitely mark here as your take profit 1, and then one price goes above that, you take the next as your take profit 2. So likewise, going up and above, you want to find more entries, you do the same thing repeatedly. Look for the fair value gap, or look for um, um, the previous high of the market, and then you execute. I'll be explaining more of this on my next video. I don't want to make this video too long, so here, do as well as possible to give us a follow. If this video taught you anything, give us a follow so that you see more videos of this. I'll be explaining how I got this magnificent sale as we are currently holding. As you can see right here, boom, 600, we got this magnificent sale. I'll be explaining how we got this analysis. We're using a CRT method of trading. It's absolutely amazing. You will not want to miss that video. So sign up, subscribe, and give us a like. You can see in the channel right here, we give that boom, boom what? Boom 600. We give that call. Where is boom 600? We give that call right here. You can see boom 600. This was the signal. This was the call. This is the call for the entry of this new one. But previously we have had boom 600 on before now. This is boom 900. Boom 900. Boom 900. 500. So yeah, we gave that signal for boom 600. I'm trying to find where we had that. Okay, boom 600. Yes, this is boom 600 when we hit TP. I'm trying to find where we gave the signal for boom 600. Okay, this is boom 600. Yes, this is where we gave the signal for boom 600. As you can see, sell boom 600 now, and you can see we ran all the way into magnificent profit, and we are about 560 pips running in profit. Now just make sure you subscribe with us, and I'll be teaching you how we got this entry. Thank you. for following. Drop your questions, drop your comments, and we move ahead.